What's going on, y'all? Welcome back to the Mining Pod News Roundup Edition. You've got Colin Harper, Editor-in-Chief at Blockspace, and we've got Matt Kimmel of CoinShares on today. It's just the two of us. Will is getting some much needed and much deserved R&R. So Matt and I are going to chop it up. We've got some interesting stories lined up. Mara's Q2 earnings, SEC approving in-kind Bitcoin ETFs, a report from the Miner Mag about Bitmain shipping in parts for their Antminers for assembly in the US, and also why JPMorgan thinks that pure play miners are going to have their go at it while HPC miners take a back seat. You were listening to the Mining Pod, and we will be jumping into the normal data roundup from our friends at Hashrate Index after a word from our sponsors. You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what. Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Alrighty, Mr. Kimmel, what are we seeing in the data? This is Hashrate Index by Luxor. We're looking at their data dashboard for Bitcoin mining right now. What are the numbers telling us? Divine the future for us, oh wise one.
What an intro. Life is good with Bitcoin still hovering around all-time high at $118,000 a coin. Hash rate became a little bit hot just before the previous difficulty adjustment. So it did go up 1% when it was expected to, when we did our last show, I think just stay flat. But hash rate's actually come off quite a bit. We're showing it on the 7-day moving average right now. Colin's got it on screen if you're watching on YouTube. But where the estimate is about 900 exahash per second. And for the next difficulty adjustment period, because of how much have come offline, the estimate is a downward 4%, 4 and about a third. And we're only 40% of the way through the epoch. So there's a lot of blocks left. Of course, that'd be very favorable for hash price, particularly in a time when the fees just don't matter very much, right? Fees are really dry, and price is really the aspect that has been driving favorable environments for Bitcoin miners. It's been showing up in the hash rate. I think we're at about $58 per petahash second per day, which is about what we've been at for the last couple of weeks now.
Yeah, we're almost at 59, so about $58.7 per petahash per day. Fees represent 1% of the current block subsidy right now, and it's kind of been ranging in this band between 1% and 2% for a long time, for basically the last, call it 6-7 months, except for a few spikes when our friends in the ordinal degen land are deciding to be a little naughty. So it's interesting also, we keep coming back to this, just looking at hash rate. Obviously we're in the throes of the summer season, so curtailment in the US is becoming very, very common as these miners around the states shut down in response to grid stress and stressors from the heat on the local populations. But we just, we keep rocketing up to this like 930, 945 exahash band, and then it just dips again. We're kind of in this limbo where we can't seem to break the hash rate all-time high, which for most miners, that's fine, right? Like they don't want to see that going up too quickly. And it's kept mining profitability elevated higher than it otherwise would be. Still just waiting for one Zeta hash, but don't really have too much more to note from that unless you do, Matt. We can move on to the next story.
Last thing I was going to say is there is basically a heat wave right across the country right now. And in Texas itself, hasn't quite touched it, but approaching 100 Fahrenheit across the state for like a week. And so
toasty.
We could be seeing some seasonal demand response, which is talked about a lot. So we don't need to harp on it too much.
No, but that's just a good context for it. I know the Southeast is getting gripped by it right now. There's quite a lot of Bitcoin mines in Tennessee, Georgia, North Carolina, that area, and in Alabama. So a lot of different ways in which hash rate can get disrupted in the US from some of the heat waves that we've been having this summer. All right, we will move on to our first story of the day, which is Mara's Q2 earnings call highlights. So listeners of the Mining Pod or people who peruse our socials might know we live streamed this. We're going to start doing that with most of the majors as long as time permits. If it's too early in the morning or too late at night, I might not get to it. We have riots coming up tomorrow, but we did Mara's the other day. And overall, a quarter that beat a lot of analyst expectations. Here are the highlights from a KPI standpoint. Total hash rate increased from 54.3 exahashes to 57.4 over quarter over quarter, almost a 6% bump. Bitcoin mined increased from 2,286 to 2,358, plus 3%. Gigawatts under management didn't change, still 1.7. Mara's revenue, this is what really beat expectations for a lot of analysts. It went from 213.8 mil in Q1 to 238.5 mil in Q2, nearly a 12% bump. And this is the big one, and we'll break this down in a second. EBITDA went from negative 493.4 million to 1.18 billion. And if you're curious how that's possible, we'll get into that in a second. SG&A ticked up a little bit from 85.9 million to 92.9 million. I'm not sure if that's cash-based SG&A. I would imagine maybe that's also includes share-based compensation, which I know the Mara team has been issuing shares, or the Mara team has been rewarding, their core team with shares over the last few years, or over the last quarter or so, and some of the executives have been cashing out accordingly. SG&A and revenue dipped a little bit from 40% to 39%, not that much at all, honestly. And that's SG&A, and that's the ratio of SG&A and revenue. And gross profit went from 82.4 mil to 105.36 mil. So, but if you're wondering how Mara can book that EBITDA, it's because Mara has 50,000 Bitcoin on its balance sheet. And now the accounting rules for these Bitcoiners allows them to add or subtract the fair change in market value of that Bitcoin to their bottom line when they're reporting these numbers. So I had some folks texting me. It's like, how is this possible? Is this number made up? It's like, no, that's not actual revenue. That's just earnings from the fact that their Bitcoin increased over the quarter quite substantially. And outside of that, a few operational updates. They've announced collaborations with these two kind of, I guess I would call them like grid services companies, TAE Power and Pato AI, basically for AI tools for grid response, load balancing. They are chipping away at their wind powered site in Hansford County, Texas. And there was one other thing I wanted to, they are also tapping the converts with a $950 million 0% convertible note due 2032. They might spend that on Bitcoin purchases. They might do M&A, might do infrastructure growth. Could be any number of things. And the last point, they are on track, they say, to energize 75 exahashes by year end. So they need another about 20 exahashes to meet that goal. Quite a big growth, target, but I'm always kind of leery about these exahash targets because miners often overpromise and underdeliver when it comes to that. But we'll see what happens. And one of the things they noted on their call that they're going to be plumbing for their growth strategy aggressively is they're really trying to partner with sovereign states like they did in the UAE to basically get allocation for power at state-run electricity generating sites. They also talked a lot about like sovereign AI use. And Fred Thiel has been very shy about talking about Mara in terms of what it might do for AI and HPC in the future. But they do see an opportunity for kind of load balancing services at some of these data centers that are doing inference, for instance, where you might have crazy swings in the usage throughout the day, where basically you can put a Bitcoin mine at that site and then you can soak up the electricity when it's not being used for AI. They haven't made any announcements for partnerships on that front, but that's something that they're signaling they want to get into. Matt, any thoughts on this earnings call for Mara? Anything that stood out?
That was comprehensive coverage. What sticks out to me is the EBITDA. I mean, somewhat obviously, but Saylor used to talk about this. The approval of fair value accounting for crypto assets for companies is a major development. I mean, so we used to see like the changes in Bitcoin asset value and in impairments. I don't have like the depth of knowledge on this to communicate how big of a deal it is, but you are seeing it now. That's notable, something for us to follow. And I mean, increasingly relevant given the amount of Bitcoin treasury, really digital asset treasury companies that are coming into the fold. Something that I don't think we saw there, but that will also come about is the changes to how you can depreciate assets based off the recent bill. So I think Blockspace Media should get an accountant on. That's what I say. Go deep in the weeds and explain.
That's a good idea.
Book value of these companies, right? It's very different now.
We should hire you as our producer. Definitely, if you're an accountant listening to this and you have any experience with Bitcoin miners, we'd love to pick your brain over what Matt just mentioned with both the added value, a change in fair value, and also the depreciation schedule for Bitcoin miners. I guess my question with, adding gain on Bitcoin assets to your bottom line, reporting it in EBITDA, most a sophisticated enough investor and institutional investors surely know this, right? If they didn't, they should probably not have their jobs. Retail investors might not be as savvy to it, but I guess I'm just curious, what does that tell investors? Because they know that that's not real revenue. They know that it's an unrealized gain on a financial asset. Are you then baking in maybe increases to that EBITDA in terms of their ability to fund operations going forward? Because that's the only way that I can look at it that it makes sense. Where if you see Mara, and I don't have the number off the top of my head, but their Bitcoin holdings increased by $1 billion or something over a quarter, right? Are you then looking at that as, well, now they have $1 billion extra that they can use to fund CapEx? That's the only way that reading that makes sense to me in terms of baking that into EBITDA, because otherwise you can't reliably look at that in terms of an earnings metric because it's not realized anyway. I'm sure there are some folks out there listening who have some smarter thoughts on that than I do, but
it's a win for the equity analysts who track these metrics very closely, and it's their professional. They're making a career out of explaining the underlying mechanics that are driving changes into these metrics and how investors should think about them. That's what I think.
Analysts got to eat.
We are Cleanspark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at Cleanspark.io. onshoring.com.
All right, we will move on to a non-mining story, but certainly bears mentioning in terms of just Bitcoin's institutionalization and financialization. Matt, will you take away our second story of the day?
Yeah, so the SEC, new head of the SEC chair, Paul Atkins, this is like his first big change as far as the digital asset industry goes, Bitcoin goes. So they changed the creation and redemption mechanism of the ETFs to be in kind rather than cash only. Look, this is something that the ETPs in Europe have already had. It was a bit of a surprise when the spot ETFs were in the negotiation phases to be launched, that they would be cash and not in kind. So to me, this is kind of a long time coming, I guess. What are the implications? The implications is that slightly more efficient product processes, slightly less costly. Before we had the spot Bitcoin ETFs in the US, right? The way that you could get exposure to Bitcoin Direct was Grayscale's investment trust. Okay. If you remember, there were major premiums and discounts over time with that. It was a closed-ended fund. That means that you couldn't create and redeem the shares to maintain the peg to the underlying asset. So the GBTC shares could not be created and redeemed with the fund to make it track Bitcoin very closely. It's a big difference today with the spot physical ones because they do track it very closely. They track it 1-to-1, right? Of course, Grayscale's was converted so that product also tracks it very closely. The reason for that is because it's an open-ended fund now, these ETFs, and it's the job of what are called authorized participants to help maintain that peg. And that's because they can create and redeem shares to make sure there's not a huge premium and discount. Previously, they did this where they would give the cash amount equivalent to create a certain number of shares to help maintain the peg. Now they would just give actual Bitcoin to do that. That means that who are some of the authorized participants? It's huge broker dealers, banks that you've heard the names of, probably Jane Street, Virtu, Goldman Sachs, UBS, to just name a few. And now those financial institutions will deal with Bitcoin directly. They will touch it, right? And I think that is probably a takeaway of something important here that could have broader implications as just the U.S. financial system is becoming more integrated with Bitcoin, right? It's something that has long been talked about by the community. And we're starting to see little nuggets of it actually taking place. And there being, the huge report put out by the working group on digital assets for the president, right? Yesterday came out at the time of recording here. It was like 158 pages and had a vision for the future as far as bank regulation goes, right? Tax, illicit finance, these types of things. So I think that this is kind of a microcosm of that bigger story. That's kind of important, that the U.S. markets are becoming a much bigger part of Bitcoin markets, and that the banks are here. You can still use self-custodial wallets yourself. You could still be self-sovereign, be your own bank, but we are getting into an era where there are intermediaries that are going to provide services, and that the general population in the U.S. will get to decide what makes the most sense for them. It's probably more than you wanted to hear, Colin. But
no, that was good context. This is why I threw this one to you, because I didn't have anything intelligent to say about it. I was mostly just interested in what this means in terms of how these are managed and how that changes, the flow of money coming in, money coming out. And I'm also just curious, you mentioned before we hopped on the show that you think there will be more demand for this than I was maybe forecasting. That actually this could be something that a lot of investors demand, is in-kind redemption of their Bitcoin.
I think because it makes it more efficient, and there's just less intermediation in the process, slightly less costly, that the institutions themselves involved in ETF processes will likely make the change.
We will be keeping an eye on that change, and you'll be the first to hear about anything that we glean from it from your friends at the Mining Pod. All right, we'll table that one because you broke it down beautifully, Matt. I don't have anything else to add there. And we'll move on to another mining story. This comes from our friend Wolfie Zhao at the Miner Mag. This is in their Miner Weekly newsletter. Bitmain funnels 187 tons of Antminer parts to skirt U.S. tariffs. So if you're following along on YouTube, if you're on audio, I'll explain what we're looking at here. Wolfie has a chart here, and he built out this really cool database where he's able to track imports of Bitmain shipments into the US using public records. And from what you can see from this chart is you see just, this explosion of Antminer S19 XPs being shipped into the US. Obviously, they aren't doing that as much anymore. That model is basically not obsolete at this point. You can still run it, but there are much more efficient miners out there. And also the S19 XP kind of had some issues. It wasn't a favorite of the mining community. But now we're seeing an uptick in raw parts and materials for Antminers tick up. In June and July, according to the Miner Mag's monthly shipping records, and I'm quoting here from Wolfie, Bitmain's subsidiary in China began sending electronic components to its Delaware-based affiliate in June 2025, marking a notable change in logistics behavior. In total, the Chinese company has shipped at least approximately 187 kilograms of electronic parts into the U.S. since June, a pattern not observed in earlier behaviors. Now, the reason why I pulled this story, and y'all probably already know where I'm going with this, is that ever since the Trump administration, threw down the sledgehammer with its tariff schedule, some of these Chinese ASIC mining companies are looking for ways to avoid those tariffs. So originally, Bitmain and MicroBT offshored a lot, if not almost all, of their ASIC manufacturing capabilities outside of China into other parts of Southeast Asia like Malaysia, Thailand, and Indonesia to escape the first round of tariffs from Trump in his 2016-2020 presidency. 2016 to 2020, excuse me. Not saying that Trump won the 2020 election, so miss me with those allegations. But they originally offshored from China in response to those. Now there are tariffs basically against every single U.S. trade partner. And that includes right now a 10% base tariff on those three Southeast Asian companies, as well as we don't really know what's going to come out of China yet. Crazy figures keep getting thrown around. First it was 30, then it was 50, and then like 500% was threatened at some point. And it keeps moving as they're negotiating. But Bitmain is now looking for ways to onshore some of that manufacturing capacity in the U.S. so that they can sell into the U.S. market without having to take a hit on those tariffs or raise their prices for U.S. miners. But we don't currently know where these facilities are for Bitmain. If you do know, hit up your boy Colin Harper at colin@blockspace.media. That's with one L, because this is something I've been really interested in to see, like, what is the scope and scale of this? Now, if we look at that chart, it's still obviously very small. I mean, 187 kilogram tons is a lot of weight. But when you look at that chart again, and I'm going to pull it up one more time here, I mean, that's just nothing compared to the volume of complete units that they were sending to the US, right? I mean, if I'm looking at this chart and reading it correctly, in 2023 in July, Bitmain sent like around 1.3 million, 1.25 million kilogram tons into the US. And that's insane, right? So, 1.25 to 1.3 million kilograms into the US, not million kilogram tons. That would be a lot more. Anyway, all that to say, it still seems to be a pretty small chunk, but it's worth paying attention to just as we look at how miners are going to react to the tariffs, specifically the ASIC manufacturers. And it's also interesting because this comes not too far after the big, beautiful bill was signed into law. And if you remember from our coverage of this last week, the big, beautiful bill has like 3 big ramifications for Bitcoin miners. One is the depreciation clause on ASICs and other mining equipment, which is mostly, germane for pure play miners. It rolls back tax credits for renewable energy like wind and solar, so bad for wind and solar miners. But the third thing that I saw that discussed less than the other two is the fact that it also includes a real estate depreciation clause for companies that are building manufacturing capabilities in the US. So if you're building a plant that manufactures or fabricates something, you can depreciate 100% of your real estate in the first year that it goes on, in the first year that facility is constructed and goes online. So I can't help but look at this in context with that as well, because perhaps Bitmain is looking at not just the fact that they need to find a way to reduce their risk to tariff price increases, but they might also be looking at this big, beautiful bill clause that, amended the tax code to allow for that full depreciation of productive assets. So wonder if that's at play here too. It's something we're going to be keeping an eye on. I'd love to get some more information on where exactly Bitmain is setting up these facilities. Anything to add, Matt?
Bitmain doing domestic manufacturing in the US would be a pretty big story. I think another news piece that I saw this week that sort of connects to what you were talking about earlier in another story with Marathon is I believe they just procured for the first time a bunch of machines from Auradine, right? Who's US chip manufacturer trying to disrupt, get their foot in the door of the competition and ASIC manufacturing. And so, yeah, you've got it shown on the screen now, 73 million worth of Bitcoin miners to Mara, who I think were exclusively using Bitmain previously. So it's a developing story. Will there be more U.S. ASIC manufacturing? We'll find out on the future Mining Pod episodes.
Yeah, and it's something that we've talked about on and off for like the last year or so. Auradine is US based. All the IP is here. Currently, I don't think they have any actual manufacturing in the US, but even just having a US based Bitcoin mining manufacturer is a completely different change from what we've seen historically, right? The ASIC landscape has been dominated by Chinese companies since Canaan launched the first one in 2013. But, questions still remain about how viable some of these new competitors will be. It's a really hard business to break into. It's not just about having leading chips. It's about also making sure that you can ramp up your production and keep some of these miners like Mara happy. Now, I would imagine that Mara got the majority of the allocation from Auradine's first batches because Mara was a huge early investor in Auradine. Speaking of pure play miners like Mara, we will end on this story. A little bit of hopium for all of our mining mafia and Bitcoin mining stock investors out there. And that is pure play miners look to outperform as HPC hybrids look stretched. This is a note from JPMorgan. Matt, what is JPMorgan telling me to ape into so that I can secure generational wealth for my children?
I would ask you the same because I have not seen this report, to be frank with you, but it seems that they are suggesting the pure play miners, of which, Colin, who are left? Who does not have any AI HPC strategy at this point? It seems like an absolute flip flop from about 2 years ago to today.
Yep. Yeah, I think it's. You can't. It kind of gets muddy depending on what you consider a legitimate pivot. But in terms of the ones who have said like we're just not going to do that, the majors are Mara, Cleanspark, American Bitcoin, and that's basically it. None of the other ones come to mind. Yeah, I guess like BitFuFu and it technically, but I don't know if they've announced anything. What's up?
Kango,
yeah. Kango's a major now. I guess not necessarily by market cap, but in terms of exahash.
Not necessarily in public discourse, but
yeah,
they have.
So you have Kango, Mara, Cleanspark. American Bitcoin. But the rest of them have, even BitDeer, is like throwing around the AI buzzword. I don't know how much they're doing with it, but that's obviously been the biggest story of the last year for Bitcoin miners. Is there's been this rush to the exit in a way to try to either acquire new sites, acquire an AI and HPC data center, a JV with a company, or retrofit something and try to find a way to monetize that by doing what CoreSci did and becoming a tenant, or maybe we haven't seen this yet really, but a miner maybe just even exiting altogether, which creates definitely less upside than if you actually execute an HPC pivot properly. But I think part of JPMorgan's point here is like this field is so overburdened right now with miners trying to do this that some of them just aren't going to be able to cut it. And so then it becomes a question of what's actually safer long term, trying to do something that you don't maybe know very well that has a huge payout potentially because we're in this big AI bubble, or do you just do this, continue grinding in this really this increasingly compressed business where actually the economics are not very good even at scale, but you also are mining a high you're mining an asset like Bitcoin that has this crazy compounding growth rate. I don't know, there's no really good answer here. I think that maybe part of the point of this investment note is too, it's like we're getting to a point where the majors in the Bitcoin mining market that actually do well are going to be maybe long-term holds because they can actually sustain their business model. They're not going to be hemorrhaging money, and they are building a valuable business for the long run, right? And that's kind of also the argument for the AI and HPC pivot. It's like you're getting out of a very brutal business that has very thin margins that are unpredictable, and you're going to be going into something that is going to revolutionize, how we do everything from talking to each other on the internet to submitting in job applications. So I would still view a lot of the miners as things that I want to trade Bitcoin's ripping, not something that I want to hold long term, though, barring a couple of exceptions.
Yeah, I mean, it's a capital intensive transition too, and there's a lot of nuances that make them different in operation. And yeah, it's a question of who's going to be able to compete in what is a different data center business and generate an ROI. And I think the future of them, if I'm going to speculate through my own opinion in them, is that Bitcoin mining will be more modular and smaller scale operations where the cheapest electricity is, and there'll be less of an appetite to build out their super high redundancy and low latency to city hubs. And the Bitcoin and the AI type of data centers would be quite different. They would need to be highly redundant, and to maybe substation dedicated with major energy infrastructure and these kind of gigawatt sized facilities. And so it's fun to think out into the future of the way that, because we've learned so much in the last year just about how people are specializing in the requirements of the business side of things when you're doing an AI company or a Bitcoin miner. It's like converged a lot, right? There's a lot of dual strategies across these companies. But what's it going to look like in like 5-10 years, a more mature state? That's going to be really interesting. Will AI continue to grow as anticipated, or is it more of a bubble? Like, will it be able to sustain the kind of dollar per megawatt numbers that people throw out there now? And what is going to happen with Bitcoin mining revenue in a couple more halvings? What's the transaction fee market going to look like, right? What's global competition going to look like? It's a complete free market. So where's Bitcoin price going to go? I mean, it's a fun thought experiment to have, but yeah, it's an interesting story.
And we will be tracking it throughout the rest of the year as these miners make these pivots or don't. Well, that does it for this week. Thank you all for tuning in. Hope everyone has a beautiful weekend. We will see you next week. And for our Tuesday show next week, we have a really fun mining episode on pleb mining with some folks who are getting a little frisky with the bid axes, not in a weird way, just in a fun way. So if you're interested in that, tune in on Tuesday. Otherwise, we will see y'all next Friday for another news roundup. Hope you all have a good weekend. Take it easy, everyone.